Good Monday. This is Jay Brew, chairman of Seafried and Brew. Last week we talked about commodity prices and we talked about the chaos out there that is really ruling all the markets around the world. So we want to check in with some overall movements in markets in the United States. For instance, we know that there's been a big decrease in terms of the Dow and the other stock markets, down just about 12% here since the high in 2015. Once again, you could be sitting there saying we're getting into bear market territory. What impact will this have in terms of 401ks, pension plans, and the impact that people feel that their wealth is not what it was? Along with it, we've had the 10-year Treasury moving down. We had a high of a 245 last year. Now it's down close to 16%, getting into that 2.07 type level. So once again, as we talked about last week, with commodity prices being so low in here that there's really no push on interest rates, and we've seen a pretty significant decline in the 10-year. But more important, because we've talked about cost of funds for community banks, what are the T-bills doing? And we talked before about how T-bill rates in here moved up to close to 0.3%, but after the Fed made their move, we've actually moved downward. And what we've seen in the last couple of days is a slight move up in terms of T-bills. But still being in that 0.2 to 0.25 range, it still would suggest to me that there's no need for community banks to raise their cost of funds in terms of money market rates and other deposit rates. So when we look at this and the impact of all of these markets, we want to keep watching. Will the Fed move rates up? I still say I wouldn't be surprised if they did, but at the same time, they shouldn't based upon what's going on. This is Jay Brew. Have a great week.